Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing the S&P 500, the NASDAQ, and the Russell 2000, and touching base on some of the important mega caps to watch like Apple and Microsoft. And what is transpiring in the markets now is very tricky. We're at an inflection point where market makers are looking to try to break this market out to the upside by sucking in new money. Now, the volume trends today have been light. Over the last couple of days, they have seen a little bit of an influx, which means that there is also selling pressure occurring at this level. The big level that I want you to pay attention to is this downsloping trend line. You can see we're clearly bubbling up into that on the SPY ETF. And then the other important levels, we've been rejected off of this orange moving average now quite a few times here. That is the 1-year moving average, 365 days of data, showing that we're still in a technical downtrend despite the spiders trying to get through that level. Now, this close is going to be pretty important. Can we take out this high? And can we get a close above that 365-day moving average by the end of the bell? That's what I'm watching. That is the big level for the S&P 500. If you get through that, then the next level of resistance is going to be retracing to this upsloping trend line break. That's going to be your next big level. But until we can get through that moving average and this trend line, we are still stuck at resistance, and it does favor more selling to continue. And basically this type of pattern where you see a little pullback, big move up, bigger drop, struggling to make a new convincing higher high, that is a distribution pattern, and you just have to be very careful if you're chasing this market and entering a new position at the resistance level. Typically after a 3-day rally or 2-day rally gap up, you want to wait for some more meaningful consolidation. Don't be the newbie that gets sucked in because things are looking like they're trending higher. If you take a look at the QQQ, Qs are also stuck at resistance. You can clearly see that we're retraced back to this breakdown zone over here on the Qs, which we're fighting right now, and you can also see this downsloping channel. So even with the positive momentum in the markets, we're really still just stuck in a sideways range, and we haven't made a bigger directional move. Now, obviously the importance of this move and what is transpiring and why the indices are at a crucial inflection point. If you look at some of the mega caps like Microsoft has made a clear technical breakout to the upside, has had a massive standard deviation move to the upside. And if you think that Microsoft is going to continue pushing higher without any sort of a pullback or retrace or profit taking, you really haven't checked out the fundamentals in terms of its valuation, what it's trading at, in terms of how big of a standard deviation move this is away from the mean. And you just have to be very cautious when buying these mega caps, because the mega caps like Apple and Microsoft now hold 14% weighting in the S&P. And when you think about how big of a rally they have had, Apple's now trading at the top end of its range, seeing some minor distribution ahead of earnings. You just have to use caution because it's going to be very difficult for the S&P and the NASDAQ to make a big directional move unless the other big mega caps continue to surge higher. When you have a 34 multiple on Microsoft, just over 29 on Apple, those multiples are not cheap. They're very rich. When you have declining GDP, as seen by yesterday's data falling lower, the fact that these multiples are getting more and more expensive, but the GDP is declining, that poses a tremendous amount of risk for the direct concentration in the overall markets. Let's take a look at the Russell, the IWM. So the Russell has had a nice terrific bounce off of this key support area over here. But the real big level for the Russell, if you look on the weekly chart, it's putting in this sideways bearish consolidation to move lower. I still have a downside target of 151 on the Russell, and I'm using this as my true economic barometer. Notice the Russell is well below its COVID trend and has been stuck there for quite a long time despite the massive strength in the overall markets. And if we look at this spider's equal weighting here, let me just pull up the equal weighting. I forgot what the ticker, I think it's SPE, equal weight, there it is, RSP. If you look at the RSP, this is the equal weighting of the S&P 500. You can clearly see there's been no major breakout of the S&P 500. You're still trading well below the 1-year moving average on the daily chart. So this is accounting for the mega caps being an equal weighting in the indice, and it clearly shows the tremendous amount of relative weakness in the overall S&P 500 if you had to bring down the weighting of the mega caps. So it's showing you the concentration of capital. There is breadth that is continuing through sectors, but the overall breadth of the market is still remaining weak. And again, you have to ask yourself, who is going to continue to keep buying these mega caps up at these valuations without meaningful consolidation and with multiples trading very, very expensive in economic conditions that are declining? Apple has a technical upsloping wedge pattern that does favor a break to the downside at some point in time, but obviously you're not at the very top of the apex, so it could continue to trend higher, and maybe it gets one little final pop on earnings, or maybe this is the exhaustion move. But it's going to be interesting because we have the Fed meeting next week, and with PCE data coming in hotter than expected today, that's a big negative for the market. That's what the Fed is not going to like, which is why I think we're going to see a more aggressive Powell. And with the mega caps trading at where they are, the S&P having a magnificent rally, the Qs having a magnificent rally, you have to naturally expect, since the data we've got in the labor market has been stronger and inflation on the PCE side has been higher, you're going to have a more hawkish Federal Reserve, a more hawkish Jerome Powell, and that's what I think is coming to fruition over the near-term horizon. So all I'm saying is there are a lot of technical long setups that are in play. However, just understand, if you're buying ETFs through S&P, they have been lifted by primarily the mega caps. And when you look at these, the equal weighting S&P 500, the RSP, it is not showing that much bullish strength. So if we see a pullback in the mega caps, which I think we're very, very due for, that's going to put a whole host of new stress on this market and likely see a bigger, quicker, sharper sell-off to the downside because capital is so concentrated. I'm just going to leave you on that note. Please give this video a big like down below. Please subscribe, as the next phase in the market is going to be a very, very tricky one if you're not prepared for it. Take care, everybody. Enjoy your weekend, and we'll see you on the charts through our weekly sector analysis.